So let's analyze ICICI Prudential Value Discovery Fund. So these are short-term returns of -2%, -7%. Not that great because Indian markets aren't doing that good. So, but when you look at the long-term returns, it is giving 8.43% annually, and then we have 19% annually, and then all from 2013 onwards, we have 18% returns annually. So, but you can compare this. This is the best value discovery fund out there. It is outperforming Nippon India Value Fund by 0.3%. And the fact that Nippon India has only 21,000 people invested in it, but ICICI Prudential Value Fund has 1.4 lakh people invested. So fund age is 12 years. Lock-in period is nil, that is zero. Expense ratio is 1.08%. Asset under management is 46,000 crores. Exit load, when you redeem it before 12 months, you will be fined or you will have an exit load of 1%, but after 12 months, there will be no exit load. Tax implications will be 20% on gains, that is STCC. Short-term capital gains tax is 20% and long-term capital gains tax will be 12.5% if your value exceeds 1.25 lakh crore, 1.25 lakh. And then these are rating companies that have rated it four star, all of them, Crisil, Morningstar, Value Research. And this is the riskometer that you are seeing on the screen. The riskometer suggests that this has very high risk. That is, your investment will be at very high risk. I don't think so because uh, there are so these are the holdings of this AMC Asset Management Company. Banks have allocation of 22%, pharmaceuticals 9.79%, or followed by automobiles, petroleum products, IT software, and these are the holdings: treasury bills, power stocks, and it also has some US stock surprises surprisingly. So these are holdings: HDFC Bank, ICICI, top prominent companies, mm, considered as darlings of the Dalal Street. Reliance Industries, Infosys, Sun Pharma Industries, Sun Pharma, and then you have Maruti Suzuki, State Bank of India. So there are also treasury bills that Dr. Reddy's Labs, Lupin, TVS Motors, several other stocks. So this is very diversified holdings. These are treasury bills 0.41% to play safe. Just have an hedge against the stocks. Treasury bills are necessary to have in the funds to stay safe, some sort of. And then we have these other funds by ICICI Prudential Fund. So this is the fund manager, Sankaran Naren, from January 21 to present. It's been 4 years. So we can go to grow for more further analysis of this fund. So again, all annualized returns is 18.38% from 2013. So it's very great deal that this company is consistently making money for investors. Net asset value is 458 rupees. Minimum asset. So you can start the systematic investment plan by just 100 rupees. Ratings is 5-star rating by Grow. Fund size is 46,000 crore again. Not crores. Yeah, 46,000 crores. So these are the holdings that you are seeing on the screen. Infosys, Maruti Suzuki, SBI Life Insurance, and then we have Cummins India. These are holdings: RBI, Treasury Bills, Gateway District Parks, British American Tobacco Industries, ADR. So this also includes some sort of US stocks. That is too good. because there will be geographical risk if your funds are very concentrated in a single economy. So equity is cash is 5.9%. 5.9% sitting on cash from 46,000 crore rupees. There is 1.4% that holdings, and equity holding is again 92.7%. So these are the sectors. Top allocated sector is financial sector, that is good. Energy, healthcare, others, consumer staples, automobile, technology, insurance. Advanced ratios, top 5 percentage is 32%. PE ratio is 17%, that is good. Again, less than Nifty. Nifty has PE ratio of now is 21. PE ratio is 17 here. PB is 2.37, alpha 7.41, beta is 0.8, Sharpe ratio and Sortino ratio. So these are several ratios. You can understand these terms here. What is alpha? What is Sortino? What is beta? PB, PE, Sharpe. Again, you can understand from this. Understand terms. Minimum for first investment, that is lump sum investment, that is 1,000. Second is 500, but SIP you can start just for 100. So these are fund returns, all 18.4% annually. 5 year past 5 years, 29%. Category average, so beating category average by huge margins. 3.4% is the category average by 1 year. Is beating by 5%. That is 8.4%, and again from 16 to 19%, comparing 23 to 29%. So this is very great one you can have in your portfolio. Again, expense ratio is 1.08%, exit load if redeemed within 12 months 1%, stamp duty 0.005%, that is very less. Tax 20%, again the budget, what the budget suggests. Understand terms, you can also understand these terms here. Sankaran Narayan, you can view the details here. BTech from IIT Chennai and MBA Finance from IIM Kolkata. So these are the funds that he is managing right now. Great. Again, Mr. Kakkar is Dharmesh Kakkar is BCom CA and CFA. So these are the funds he is managing right now. Sarmila DeMello is a CA and BA, Bachelor in Accounting and Finance. You can see she is managing a lot of funds here. CA BCom. Masumi Jurmarwala, CA MCom BCom. She is associated with ICICI Prudential Asset Management Company from 2016. That's a big deal. It's been 9 years. So ICICI Prudential is a equity mutual fund scheme. You can read it more. You can understand more. The NAV is 458 rupees and as the AUM is 7,081, 7,81,000 crores. The ICICI is a whole mutual funds. So this is the address of this fund. Other plans in the same fund. Yeah, so you can just compare funds. These are frequently asked questions. So thank you. Consider subscribing to my channel if you find it